ExamPrep.School. Missouri Surplus Lines Insurance Exam, Exam Code 82. There are 6 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. General insurance terms and concepts. Surplus lines laws and regulations. Surplus lines licensee. Surplus lines markets. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Under standard property insurance principles, an applicant must demonstrate insurable interest at which of the following times to ensure coverage for a loss? A. At the inception of the policy period. B. At the time of loss. C. Upon submission of the insurance application. D. At each policy renewal date. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is B. Property insurance requires that insurable interest exist at the time of loss so that the insurer can indemnify actual financial loss. Other times, such as application or renewal, do not satisfy the loss payment requirement. Reason A is not correct. This is incorrect because having interest at inception alone does not satisfy the requirement for indemnification upon loss. Reason C is not correct. This is incorrect because interest at application ensures eligibility but not entitlement to a loss payment if interest ceases before loss. Reason D is not correct. This is incorrect because renewal timing does not determine whether insurable interest exists at the moment of loss. Question 2. Which of the following is an example of a pure risk rather than a speculative risk? A. Purchasing a call option on a stock. B. Suffering damage from an earthquake. C. Starting a new business venture. D. Entering a poker tournament. The correct answer is B. A pure risk involves only the possibility of loss or no loss. Earthquake damage fits this definition. The other options involve potential gain as well as loss, characteristic of speculative risk. Reason A is not correct. This is incorrect because options trading can result in gain or loss, making it a speculative risk. Reason C is not correct. This is incorrect because new business ventures carry the possibility of profit as well as loss. Reason D is not correct. This is incorrect because gambling carries both potential gain and loss, defining a speculative risk. Question 3. An underwriter reviewing a small manufacturing plant notes 2 issues. The plant routinely stores flammable chemicals adjacent to unguarded industrial heaters, and records reveal the owner previously submitted inflated damage claims. Which of the following pairs correctly identifies the types of hazards represented by the storage practice and the claim history, respectively? A. Physical hazard for storing flammable chemicals near heat sources, and moral hazard for past inflating of claims. B. Moral hazard for storing flammable chemicals near heat sources, and physical hazard for past inflating of claims. C. Morale hazard for storing flammable chemicals near heat sources, and physical hazard for past falsification of claims. D. Physical hazard for storing flammable chemicals near heat sources, and morale hazard for filing inflated insurance claims. The correct answer is A. This option is correct because storing flammable chemicals near heat sources constitutes a physical hazard, an environmental condition that increases the chance of loss, whereas past inflating of claims represents a moral hazard involving intentional dishonesty by the insured. Reason B is not correct. Moral hazard does not apply to the storage of chemicals. That is a physical hazard, and inflating claims is an intentional act, not a physical condition. Reason C is not correct. Morale hazard involves indifference or carelessness, not the storage of chemicals. Falsifying claims is a moral hazard, not a physical hazard. Reason D is not correct. Moral hazard refers to a careless attitude, not fraudulent acts. Filing inflated claims is a moral hazard, not a morale hazard. Question 4. Which of the following best defines actual cash value as applied in property insurance valuation? A. Original cost of property adjusted for inflation. B. Agreed value without adjustment for depreciation. C. Replacement cost minus depreciation and obsolescence. D. Market value determined by localized real estate listings. The correct answer is C. The correct answer is that actual cash value equals replacement cost minus depreciation and obsolescence, reflecting the current cost to replace property less allowances for wear, tear, and functional loss. Reason A is not correct. This choice is incorrect because actual cash value uses replacement cost as the basis, not the original purchase cost adjusted for inflation. Reason B is not correct. This choice is incorrect because actual cash value requires deduction for depreciation rather than an agreed value without adjustment. Reason D is not correct. This choice is incorrect because actual cash value is based on replacement cost, less depreciation, not on market listings. Question 5. Under a replacement cost coverage, which condition is typically required for the insured to recover full replacement cost without deduction for depreciation? A. Waive the policy deductible before commencing repairs. B. Submit an advanced depreciation schedule to the insurer. C. Demonstrate inability to secure a similar property on the open market. D. Repair or replace the damaged property within a specified period following the loss. The correct answer is D. The correct answer is that replacement cost coverage generally requires the insured to repair or replace the property within a defined time frame after the loss to qualify for full value payment without depreciation. Reason A is not correct. This choice is incorrect because waiving the deductible is not a condition for receiving full replacement cost benefits. Reason B is not correct. This choice is incorrect because depreciation schedules are not typically required in advance for replacement cost coverage. Reason C is not correct. This choice is incorrect because proving inability to find a similar property is not a standard condition for replacement cost recovery. Question 6. In the context of insurance, which of the following most precisely defines liability? A. The obligation to compensate for bodily injury or property damage resulting from a legal fault. B. The financial risk assumed by an insurer under a policy in exchange for premiums. C. A contractual guarantee that losses will be indemnified regardless of fault. D. The transfer of risk from the insured to the insurer upon purchase of a policy. The correct answer is A. The correct answer defines liability as the legal obligation to compensate third parties for harm caused by a fault, which is the core meaning of liability in insurance. Reason B is not correct. This describes the insurer's assumption of risk rather than the insured's obligation for damages to others. Reason C is not correct. This implies indemnification without regard to fault, which does not capture the legal requirement tied to fault. Reason D is not correct. This describes the risk transfer mechanism, not the insured's obligation to compensate injured third parties. Question 7. Which element of negligence requires proof that the defendant's breach was both the direct cause in fact and the legally recognized proximate cause of the plaintiff's injury? A. Duty. The defendant's legal responsibility to conform to a standard of conduct. B. Breach. The failure to meet the applicable standard of care owed. C. Causation. The linkage establishing that the defendant's conduct actually and proximately resulted in harm. D. Damages. The measurable losses sustained by the plaintiff due to the defendant's actions. The correct answer is C. The correct answer is the element of causation, which encompasses both cause in fact and proximate cause, linking the breach to the injury sustained. Reason A is not correct. Duty concerns the obligation to adhere to a standard of care and does not address the causal connection to harm. Reason B is not correct. Breach denotes failure to meet a standard, but does not establish the mechanism by which the breach produces injury. Reason D is not correct. Damages quantify the loss suffered rather than establishing the causal nexus between breach and harm. Question 8. In Missouri surplus lines placements, which statement accurately distinguishes an admitted insurer from a non-admitted insurer? A. An admitted insurer is domiciled outside Missouri and must obtain a surplus lines license to write any business in the state, while non-admitted insurers are domiciled in Missouri. B. An admitted insurer operates exclusively in the admitted market and cannot write surplus lines, while a non-admitted insurer is licensed and can write both admitted and non-admitted policies. C. An admitted insurer's policies are ineligible for Missouri Guarantee Fund coverage, whereas non-admitted insurers participate in the Guarantee Fund for insolvent insurer protection. D. An admitted insurer is licensed in Missouri and subject to state-mandated rate and form filings, whereas a non-admitted insurer is not licensed in Missouri and not required to file rates or forms. The correct answer is D. This option is correct because admitted insurers hold a Missouri license, file rates and forms with the state, and their insureds are covered by the Missouri Guarantee Association, whereas non-admitted insurers do not file rates or forms and do not offer guarantee fund protection. Reason A is not correct. This is incorrect because admitted insurers are domiciled or licensed in Missouri, and non-admitted insurers are not. Reason B is not correct. This is incorrect because non-admitted insurers are not licensed in Missouri and cannot operate freely in the admitted market. Reason C is not correct. This is incorrect because admitted insurers' policies are covered by the Missouri Guarantee Fund, while non-admitted insurers are excluded from that protection. Question 9. What is the primary purpose of the excess and surplus, E and S market for hard-to-place risks? A. To extend coverage for exposures deemed unacceptable or non-conforming to admitted market underwriting criteria. B. To provide coverage options for risks that admitted insurers regularly underwrite at reduced rates. C. To offer lower-cost coverage for standard risks that are readily accepted by admitted insurers. D. To guarantee performance of policies issued by insolvent admitted carriers to protect insureds. The correct answer is A. This option is correct because the excess and surplus market exists to insure risks that do not meet admitted market standards, such as unusual, high hazard, or non-standard exposures that admitted insurers will not underwrite. Reason B is not correct. This is incorrect because admitted insurers do not regularly underwrite these non-conforming risks at reduced rates. Reason C is not correct. This is incorrect because the E and S market focuses on non-standard or high-hazard risks, not low-cost standard exposures. Reason D is not correct. This is incorrect because guarantee fund performance guarantees apply to admitted insurers, not to the E and S market. Question 10. A surplus lines broker is tasked with securing coverage for a small metal fabricator whose pollution liability risk falls outside standard insurer appetite and for which admitted carriers have reached capacity. The broker explains that coverage must be placed in a non-standard market. Which of the following definitions best describes a non-standard market in surplus lines? A. A marketplace of insurers authorized by the state to underwrite only risks with low hazard profiles. B. A pool of non-admitted insurers providing capacity for risks declined or underserved by admitted markets. C. A captive insurance arrangement established by policyholders to insure specialized risks of affiliated entities. D. An admitted market segment dedicated to large commercial risks with high premium volumes. The correct answer is B. The non-standard market refers to non-admitted insurers offering coverage for risks that admitted carriers decline or lack capacity to underwrite, not an admitted or captive market. Reason A is not correct. Describes admitted insurers authorized by the state rather than non-admitted specialty capacity. Reason C is not correct. Refers to a captive arrangement, not the non-admitted market for substandard risks. Reason D is not correct. Refers to an admitted market segment for large risks, not the non-standard surplus lines market. Question 11. Which description accurately reflects the legal structure of Lloyd's of London? A. A reciprocal insurer where members exchange obligations. B. A corporation owned by shareholders that underwrites policies through branches. C. A government-chartered monopoly for marine insurance. D. An unincorporated marketplace where subscribing underwriters form syndicates to underwrite risks collectively. The correct answer is D. Lloyd's of London operates as a market rather than a single company. It is unincorporated and underwriters join syndicates to share risk and capital. Reason A is not correct. That description is incorrect because Lloyd's does not operate as a reciprocal insurer, exchanging obligations among members. Reason B is not correct. That description is incorrect because Lloyd's is not a shareholder-owned corporation with branch operations. Reason C is not correct. That description is incorrect because Lloyd's is not a government-chartered monopoly focused solely on marine insurance. Question 12. Under the Lloyd's of London structure, underwriting members participate in syndicates primarily by A. Indemnifying insurers for policy claims across all syndicates. B. Delegating authority to brokers to set premium rates. C. Subscribing capital to a syndicate and assuming proportional underwriting risk. D. Providing reinsurance to other syndicates within the market. The correct answer is C. Underwriting members commit capital and bear a share of profits and losses in proportion to their subscription to a syndicate's risk. Reason A is not correct. That description is incorrect because members bear claims based on their own subscribed risks, not indemnify other insurers across all syndicates. Reason B is not correct. That description is incorrect because underwriting members do not delegate premium setting authority to brokers as their primary participation. Reason D is not correct. That description is incorrect because members do not primarily function as reinsurers for other syndicates within the market. Question 13. A surplus lines broker needs professional liability coverage for a client with a complex risk profile that admitted insurers have declined. The broker submits the risk to Lloyd's, where a Lloyd's underwriter binds coverage on behalf of a syndicate. Which statement best describes the underwriter's authority in this placement? A. The underwriter operates as an agent of the syndicate's managing agent with authority delegated by its members. B. The underwriter has unlimited authority to finalize policy wording without consulting the syndicate's managing agent. C. The underwriter acts under the surplus lines broker's direction and binds coverage as the broker's representative. D. The underwriter must obtain individual member approval before binding coverage for the syndicate. The correct answer is A. The correct answer is that Lloyd's underwriters are appointed by the managing agent to represent the syndicate's members and bind coverage within delegated authority parameters established by those members. This structure ensures that underwriters act on behalf of the syndicate under clearly defined delegation protocols. Reason B is not correct. Unlimited authority is incorrect because binding authority is always constrained by delegation limits set by the managing agent and syndicate members. Reason C is not correct. Acting under the broker's direction is wrong because underwriters derive their binding power from the managing agent, not from the surplus lines broker. Reason D is not correct. Requiring individual member approval is incorrect because the managing agent delegates authority centrally, avoiding the need for each member to approve every binder. Question 14. Under U.S. surplus lines regulations, which of the following best defines an alien insurer? A. An insurer incorporated in a U.S. state other than the one where the policy is issued. B. An insurer domiciled within any state but not admitted in the policy issuing state. C. An insurer organized under the laws of a country other than the United States. D. An insurer licensed by the federal government to underwrite national risks. The correct answer is C. The correct answer is an insurer organized under the laws of a country other than the United States, because surplus lines laws distinguish alien insurers by their non-U.S. domicile. Reason A is not correct. This describes a foreign insurer within the U.S., not an alien insurer domiciled outside the country. Reason B is not correct. This describes a domestic insurer unauthorized in a particular state, not an insurer domiciled abroad. Reason D is not correct. Federal licensing for national risks does not define an insurer's domicile as outside the U.S. Question 15. Which of the following jurisdictions is commonly recognized as a non-UK foreign market for surplus lines capacity? A. Lloyd's of London. B. Bermuda. C. California admitted market. D. Canadian licensed insurer. The correct answer is B. The correct answer is Bermuda because it serves as a leading offshore hub for surplus lines placements outside the United Kingdom. Reason A is not correct. Lloyd's of London is located in the UK and is not considered a non-UK foreign market. Reason C is not correct. The California admitted market is a domestic admitted market rather than a foreign surplus lines hub. Reason D is not correct. A Canadian licensed insurer operates under Canada's admitted market, not an offshore surplus lines market. Question 16. A U.S. manufacturer with specialized risk exposures cannot obtain coverage from admitted insurers and engages a surplus lines broker to place a policy with a Bermuda domiciled insurer. Under state surplus lines rules, which action must the broker perform when placing coverage with the offshore insurer? A. Broker must ensure that the Bermuda insurer is included on the state's list of eligible unauthorized insurers and file the surplus lines affidavit. B. Broker must verify that the Bermuda insurer holds a certificate of authority issued by the state surplus lines office prior to placement. C. Broker must secure cession of the offshore insurer's liability to a domestic admitted carrier through a facultative reinsurance arrangement. D. Broker must notify the state insurance department and obtain a use and file permit for the offshore insurer before binding coverage. The correct answer is A. The broker must place coverage only with insurers listed as eligible unauthorized carriers and timely file the required surplus lines affidavit under state law. Reason B is not correct. State rules do not require a certificate of authority from a surplus lines office for non-admitted carriers. Reason C is not correct. There is no requirement to cede liability to an admitted carrier when placing offshore surplus lines coverage. Reason D is not correct. Use and file permits are not part of the surplus lines placement process for offshore insurers. Question 17. According to Section 384.015 of the Missouri Surplus Lines Law, how is surplus lines insurance defined? A. Coverage written by an insurer admitted in Missouri and placed through the surplus lines market due to risk complexity. B. Any type of specialty insurance written by unauthorized insurers without the need for a surplus lines broker. C. Insurance placed with a non-admitted insurer through a licensed surplus lines broker when the required coverage is not available from admitted insurers. D. Insurance procured from foreign insurers without a license when admitted insurers decline the risk. The correct answer is C. This option accurately captures the statutory requirement that surplus lines insurance must be placed with a non-admitted insurer through a licensed broker when coverage is unobtainable from admitted insurers. Reason A is not correct. This is incorrect because surplus lines insurance cannot be placed with admitted insurers. It involves non-admitted insurers. Reason B is not correct. This is incorrect because surplus lines insurance must involve a licensed surplus lines broker and is only used when admitted market coverage is unavailable. Reason D is not correct. This is incorrect because surplus lines insurance requires broker licensure and applies only when coverage is unobtainable from admitted insurers. Question 18. Under Section 384.015 of the Missouri Surplus Lines Law, which statement best defines a non-admitted insurer in Missouri? A. An insurer that is incorporated outside of Missouri but is licensed to transact insurance in the state. B. An insurer not licensed or authorized to transact insurance in Missouri. C. An insurer headquartered in Missouri but not admitted by the Department of Insurance. D. An insurer that exclusively insures risks located outside of Missouri. The correct answer is B. This option correctly reflects that a non-admitted insurer is one that is not licensed or authorized to transact insurance in Missouri under the statute. Reason A is not correct. This is incorrect because a non-admitted insurer must not be authorized to transact insurance in Missouri, regardless of place of incorporation. Reason C is not correct. This is incorrect because being headquartered in Missouri does not grant admission status. The key is licensure. Reason D is not correct. This is incorrect because exclusivity of risk locations does not determine admitted status under Missouri law. Question 19. A surplus lines broker in Missouri is evaluating whether Advance Reinsurance Company, domiciled in Bermuda, qualifies as an eligible surplus lines insurer under Section 384.015. The broker notes that Advance is not licensed in Missouri but meets AM Best's financial strength requirement and has established a trust fund in a U.S. bank. Which factor confirms Advance's status as an eligible surplus lines insurer? A. Being licensed as an admitted insurer in another U.S. state. B. Having received an AM Best rating of at least AI. C. Obtaining a certificate of authority as a surplus lines insurer and maintaining the required trust fund. D. Operating as a risk retention group under federal regulations. The correct answer is C. The correct answer is that the insurer must obtain a certificate of authority as a surplus lines insurer under Missouri law and maintain the required trust fund in a U.S. financial institution. Meeting a financial strength rating alone is not sufficient without state approval. Reason A is not correct. Being licensed as an admitted insurer does not satisfy the non-admitted surplus lines insurer requirements under Section 384.015. Reason B is not correct. A financial strength rating is necessary but not sufficient without the surplus line certificate of authority. Reason D is not correct. A risk retention group is a distinct entity governed under federal law, not the surplus lines insurer category in Missouri. Question 20. A Missouri manufacturer cannot obtain coverage for a high-hazard chemical exposure from admitted insurers after a 3-insurer decline. The broker explains that placing with a non-admitted insurer under Section 384.015 constitutes surplus lines insurance. What best describes surplus lines insurance under Missouri law? A. A form of reinsurance purchased by admitted insurers to transfer risk. B. Insurance placed with a non-admitted insurer when equivalent coverage is unavailable from admitted carriers. C. A policy issued by an admitted insurer for high-risk exposures at higher premiums. D. A self-insurance program for groups of similar high-risk entities. The correct answer is B. The correct answer describes surplus lines insurance as coverage placed with a non-admitted insurer after a good faith effort to secure equivalent coverage from admitted insurers has failed, as defined in Section 384.015. Reason A is not correct. Reinsurance involves risk transfer between insurers, not primary placement for insureds. Reason C is not correct. Policies issued by admitted insurers are not classified as surplus lines under Missouri law. Reason D is not correct. Self-insurance programs are not regulated as surplus lines insurance. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below. We read them all. Find full practice exam books in the description or at ExamPrep.School.